I now declare this 43rd meeting of the, excuse me, I have two dates here. One's 42 and one's 43.
No, let's be 43.
Let's go with 43. 43 is the accurate. I have two pieces of paper that say two different numbers, of course. 43 would appear to be the accurate number, not that it's that important. Colleagues, before we turn our attention to the matters at hand, just a couple of minor housekeeping matters. We've had a request from the folks from Trinidad and Tobago who are here on a tour. They're here January 7th, 8th. We won't be around, and I've already given the okay for the usual kind of things that might happen. The one thing they've asked for, because they're doing a bit of a documentary and they've got a television crew, they would like permission to use videos and photographs of this committee. I gather stuff we've done in the past, other pictures that exist. Going that far in terms of approval, I thought I'd bring that to you. Seems pretty straightforward to me, but if there's any questions or comments, I'll entertain them. Hearing none, then we'll give approval to that. I've already given an okay for the routine stuff, but that part we want to make sure we're okay. All right, Madam Clerk, I'll give you what you need. Good, thank you. And then also just a reminder, our first meeting back is Monday, January the 26th, and I commit to colleagues that whatever work I put on there for that day, it won't be a hearing, which is the one thing that we try to avoid, is coming back from a break and then immediately entering into a public hearing. That won't happen. I suspect we will have some draft reports and we can do some draft report writing at that time, and that's what I'll be looking to schedule. And lastly, just a notice to colleagues that every time a sitting is completed, as you know, we rotate the times of the committees. We will be moving to Monday and Wednesdays, 3:30 to 5:30, which will be our new home through to the spring-summer rise. Okay, there being no other matters before us, I will turn the committee to our public hearing today on Chapter 3, Aggressive Tax Planning of the Spring 2014 Report of the Auditor General of Canada. And this, I believe, Madam Clerk, is the last chapter in that entire report. And this is a conservative choice and winds up our work there and lets us begin starting to schedule hearings on the latest report that we've just received. So I will call on our Auditor General to introduce his delegation, and in due course, Mr. Ted Gallivan, the Deputy Assistant Commissioner of the Canada Revenue Agency, to introduce his delegation and give his opening remarks when the time is appropriate. But first, we will hear from our Auditor General, Mr. Ferguson. Sir, you now have the floor.
Thank you. Mr. Chair, thank you for this opportunity to discuss Chapter 3, Aggressive Tax Planning. Joining me at the table is Vicki Plant, Principal, who was responsible for the audit. Many taxpayers, including individuals, corporations, and trusts, use tax planning to reduce or eliminate the amount of tax owing. Canadian courts have held that, in general, taxpayers have the right to enter into transactions that will minimize their tax liability. However, that right has been restricted in Canada by statutory anti-avoidance rules, including the General Anti-Avoidance Rule, or GAR. The GAR may apply to tax plans that are considered aggressive, which the agency defines as arrangements that push the limits of acceptable tax planning. Dans son profil de risque,
in its corporate risk profile, the agency has identified aggressive tax planning as one of the highest risks to its mandate of ensuring that taxpayers meet their compliance obligations. Our audit focused on how the Canada Revenue Agency manages the aggressive tax planning program, which identifies emerging tax avoidance issues, arrangements, and products, and handles cases requiring a remedy for tax avoidance. We also examined how the Department of Finance Canada responds to requests for legislative changes to address the aggressive tax planning issues that the agency identifies.
An aggressive tax plan. For the purposes of our audit, we selected 4 examples from the numerous types of plans of which the agency was aware. Notre audit nous a permis de constater que l'Agence de revenus du Canada.
Our audit showed us that the agency has the appropriate measures in order to fully evaluate whether it's able to detect high-risk large business files. The agency has had a set of tools in order to detect aggressive tax planning, such as risk-based audits, referrals, voluntary disclosures, from informant leads, and from publicly available information, such as on the Internet.
Evaluated whether it is able to detect high-risk large business files. Without this evaluation, it cannot be certain that high-risk cases are in fact being identified and selected for follow-up. The agency has had success in correcting non-compliance, both through reassessments and through requesting changes to tax legislation by the Department of Finance. A taxpayer can appeal a reassessment, and the matter may ultimately be decided by a court decision. Of 54 cases litigated since 1988 on the basis of GAR, the agency was successful in 28 cases. A lost case is regarded by the agency as a learning experience and clarifies how the courts view a particular aggressive tax plan. L'agence mesure son rendement.
The agency uses 3 main performance indicators: salary utilization, tax earned by audit, and the quality of file assessments. Tax earned by audit is a useful measure of the short-term result of the agency's compliance efforts, since it is a measure of taxes assessed on a non-compliant taxpayer. However, it is not an adequate measure of long-term success. For example, the deterrent effect of the program may result in fewer taxpayers participating in aggressive tax plans. The agency has taken steps to develop better measures with the large business sector, and we encourage the agency to expand its approach to the ATP program.
Determine how specific requests from the Canada Revenue Agency for legislative changes to block aggressive tax plans were analyzed by Department of Finance staff. The Department determined that this information constitutes a cabinet confidence outside the scope of the Auditor General's access entitlements under existing orders in Council. For that reason, the Department did not grant access to the requested information. Therefore, we could not determine whether the Department of Finance Canada had followed its processes in providing timely analysis of requests from the agency. We were able to see that most of the requests from the agency in the 3 years under audit were addressed by the 2011 to 2013 federal budgets. Nous sommes heureux de vous informer.
We are pleased to report that the agency agreed with our recommendations and made several commitments in its response. We received a copy of the action plan the agency submitted to the committee and found it consistent with our recommendations. Mr. Chair, this concludes my opening remarks. We would be pleased to answer any questions the committee may have. Thank you.
Ferguson. And before I turn to Mr. Gallivan, I just want to compliment you on the timeliness of your action plan. These are very important to the work we do. Those departments that are wait to the last second, or worse yet, don't provide one, hear from us about that. And I've always felt that we should give compliments the other way. And not only did you get it early enough for us, but you got it early enough that the Auditor General had a chance to look at it and give his comments. That is very, very helpful and much appreciated. With that, I turn the floor over to you, Mr. Gallivan.
Thank you, Mr. Chair. Mr. Chair, this afternoon I'm joined by Lisa Anawadi, the Director General of the International and Large Business Program Directorate within the CRA. She has direct responsibility for aggressive tax planning. We're pleased to have the opportunity to come before committee today to support your consideration of Chapter 3 of the OAG 2014 Spring Report. En vertu du fait que mes remarques d'ouverture sont dans mon cartable, je vais...
Given the fact that my remarks are in the binder, I'm going to limit myself to a few comments, and I will give you more time for questions.
Made by the OAG. At the outset, it's important to note that there are a number of legal ways that taxpayers can reduce the amount of taxes they're required to pay: claiming allowable tax credits and deductions, sheltering investments, inside tax-free savings plans, and offsetting business losses against income are just a few examples. In fact, the government encourages Canadians to take advantage of legitimate tax savings wherever they can. L'évitement fiscal abusif a lieu.
Aggressive tax avoidance occurs when a person takes part in schemes or transactions that are clearly abusive in nature, where their primary purpose is to avoid the payment of required taxes. While these transactions may comply with the letter of the law, they clearly violate the spirit and intent of the law.
They looked at 4 specific abusive planning arrangements selected for the audit, and they confirmed that the CRA has delivered positive results in all 4 cases. While the Auditor General confirmed that the CRA has the tools required to detect, correct, and deter non-compliance of taxpayers using aggressive tax plans, our objective is to further enhance CRA's approach. The Auditor General made 3 recommendations to help us do exactly that. La première touchait l'évaluation du risque.
The first has to do with assessment of risk. The OAG recommended that the CRA test the effectiveness of the National Risk Assessment Model, the NRAM, the formal tool that identifies the most high-risk files. The CRA has developed plans to conduct this testing, and we are on track to have ongoing testing of the tool during the 2015-2016 fiscal year.
Recommendations with regard to training. The OAG recommended that the CRA monitor the training progress of our aggressive tax planning auditors against their learning paths and use this information to identify training gaps. A learning path is a document that sets out what the required courses and other training that we expect our auditors to receive. A training framework has already been developed, and this full exercise will be completed by March 31st. The third formal recommendation made by the Auditor General touched on performance measures. The Auditor General recommended that the agency reevaluate its performance measures for its aggressive tax planning program and develop measures and indicators that better reflect program success. There was a focus on an internal measure known as tax earned by audit, or TEBA. The Auditor General observed that some important results were not being included in TEBA, and other desirable outcomes could actually make tax earned by audit go down. The CRA has committed to developing a list of relevant performance measures by March 31st, 2015. This work is already underway, and we have already made an adjustment to our TEBA coding practices so that we can better measure the performance of the aggressive tax planning program. As reflected in the detailed action plan submitted to the committee, the CRA has been active in addressing this chapter and has plans in place to meet all of the commitments made in our management action plan. In closing, the CRA recognizes the importance of the aggressive tax planning audit program. We have a responsibility to continue to improve this program, and we appreciate the recommendations the OAG has made that will help us strengthen it. Thank you, Mr. Chair, and I too remain open to questions.
Very good. Thank you. And I note that we have 2 representatives from the Department of Finance, Brian Ernewine, General Director, Tax Policy Branch, and Alexandra McLean, Director, Tax Legislation from the Tax Policy Branch. And you've chosen not to have an opening statement. You're here to provide any answers to questions that are put to you, correct? Very good. Colleagues, unless there's some reason not to, we will now proceed with our regular Q&A in the regular rotation, beginning with Mr. Albus, who now has the floor, sir.
Thank you, Mr. Chair, and I appreciate all the people that are here today and for your work you do for our country. I'm going to start just with the Auditor General. Auditor General, you may remember at the May 7th, 2014, this year hearing, I did ask you a number of questions in regards to this particular report. I just wanted to go back again to paragraph 3.58. Again, that's a description. You provide a description of the process used for legislative changes, a template used in budget briefings, and information about budget measures announced by the department, and some analysis. At that day, you did say that that they were compliant in giving what they could, at least what they felt they could, that wouldn't compromise cabinet confidentiality. Is that still your opinion today, sir?
We asked them for a certain number of documents and information. They provided us some of the information as described in paragraph 3.58. There was other information that the department said was cabinet confidence information. Of course, I've got no way of verifying that, because obviously we didn't see the information. But certainly, I do believe that the department went through its process to determine what they could provide us, and determined that some of the information was cabinet confidence.
And so if someone looking at the chart that you provided, they could directly see that recommendations made were followed up on, whether it be legislative or otherwise. Is that correct?
The chart, you referred to a chart, sorry?
There's a chart attached that actually points out all of the documentations, or at least the which one is it here? Exhibit 3. No. There is a chart in here that we discussed, and basically outlined what was asked for as far as the list of items that you could say this is what was suggested, this is what has been done. But again, you pointed it out that there was a direct correlation between those two. Is that correct?
Yeah. I think you're referring to Exhibit 3.1 just after paragraph 3.10.
Yeah.
Which looks at the four aggressive tax plans, the four types of aggressive tax plans. It identifies the four types of aggressive tax plans that we looked at, and it indicates what has happened in each of those cases. So it's not a chart looking at, what did we ask for, but it's a chart that said we were looking at these items that CRA had identified as potential issues, what's happened since then. And it identifies that in 3 of the cases there were federal budget measures put in place to try to deal with the issues, and in the other case the courts had ruled that CRA's approach was appropriate, so therefore no further legislation was considered necessary at that point in time.
Okay, thank you very much. And you may remember, Mr. Chair, also in the same public hearing I asked the Auditor General in regard to the fact that CRA had established a training plan for aggressive tax planning and for their auditors, and had put in place performance measures to evaluate the aggressive tax planning results. Now, the Auditor General agreed in terms of the training, but said CRA needed to do a better job of making sure they know whether or not auditors are following through on the training. So I'd asked the CRA, what is your response to that, and how have these the recommendation of the Auditor General in regards to training and following through with auditors, how has that changed? Thank you,
Mr. Chair. We at the CRA, we do have a very robust training program. What was acknowledged, and we acknowledge that we can monitor it. If I can explain, typically we have individual learning plans, courses that are developed by our headquarters functions. The delivery of the program, of the courses is done by our regional offices, and the monitoring is done by the regional offices. However, as noted in the Auditor General's report, while that is an effective use of our training resources, better monitoring could actually improve. So we have already started the process of developing a monitoring framework, which will include looking at comparing the courses that were delivered against the individual auditors' learning plans. It also includes an evaluation of the courses themselves and how they're delivered. So, in fact, we're going to take that recommendation beyond the aggressive tax planning program, but also to the rest of our international large business courses.
That's very reassuring. What other steps have you taken to ensure that the auditors you have, the CRA, have the tools and the training and the feedback systems to protect the integrity of our tax system?
I think the first thing to lead off with is that while we have documented training paths, we have the documented training courses, we figured out we have to answer 3 key questions. First, is the training that's supposed to be offered? Second, are the auditors actually taking the training? And third, what is the assessment of the result of that training? In other words, is the learning being ingrained in the performance? And the key to all of that is our quality assurance regime. And so what the Auditor General pointed out is we needed to be more detailed in documenting all of this and make a tighter link between our quality assurance regime, the quality of the audits, and the training. And that if there was a gap in the quality of the audit work, then we need to push that back into the training and not just fix the issue with that one file, but fix it across the suite of the files we do. I guess finally I'd add one more point. Aggressive tax planning is a specialty area. The 460 full-time equivalent who work in this area are specialists. They work on this type of file. So that level of specialization is another thing that we do to make sure that we have the right people working on the right file.
Okay, thank you. Time has expired. Thank you. Moving along and over to Mr. Allen. You now have the floor, sir.
Thank you, Chair, and thank you to folks for being here. Mr. Ferguson, in response to a question from my colleague, you talking about documents didn't receive, and whether they be cabinet documents or some other form that the department decided couldn't be released. In your view, since you were not sure, you just take their word for it. It doesn't seem to be a process. From your perspective, is there a way for a process for both parties to be assured, yourself, not us, by the way, I'm not talking about the opposition, that yourself as the Auditor General of Canada and the department, is there a way to assure each other that indeed it should be kept in confidence, and you would just simply say, well, that's right, you keep that one, we don't look at that one. Is there a way to do that, sir?
In fact, we do have a protocol in place, and I don't have all of the specifics with it, but it allows us to communicate, directly with the Deputy Minister and then directly to PCO for them to consider. And again, obviously, it's considered inside the government, but there is a process to do that. Now, we do have underway as well right now, we're having a discussion with PCO in particular in terms of that protocol to see if there's anything else that we can do to strengthen it. But I think as a basis, the protocol is a good way to approach the issue. I think really our concern in this case really was, again, they did provide us with information to describe the process, and some other bits of information. But fundamentally, I guess we felt that some of this analysis should exist in documents that were not connected to cabinet confidence documents, given the type of analysis that it is. So I'm not questioning whether it was or was not in a cabinet confidence document. What I'm saying is that some of this type of analysis could be done and documented in a way that is outside the cabinet confidence documents in future cases, so that we would have access to that type of information.
Thank you for that. I appreciate it. Ms. Anawati, the Auditor General talked, and you talked briefly about I think your acronym is called NRAM, I think is what we call the program, and I think earlier you identified, or at least Mr. Gallivan may have identified you as such, as the person responsible for the program. And I noticed in the Auditor General's report, it said you actually were trying to take, you needed to look at the effectiveness of actually that program. And so now I recognize through your action plan, you're working towards that. Can you give me any sense of where you're at the moment? I do recognize some numbers or some dates were thrown around, but end dates can mean a number of things. Does that mean a certain percentage are actually going to be trained at that point in time? All are going to be trained at that point in time? Give me a sense of how that's going.
Yeah, if I can give you the response to that.
Sure.
First of all, the effectiveness of the risk assessment is what we're talking about, not the effectiveness overall of the program, because we have some different numbers that speak to that. In terms of the National Risk Assessment module, which is a new, more systematic way of grading files and deciding who's the riskiest and where is that risk, we spent a number of years implementing that new, more rigorous approach. Where we are right now is in a process of automating that system. So we actually have a new interface that allows the auditors to kind of see those results very graphically to help improve the process. This fiscal year, we're doing a comparison between what did our risk indicator tell us and what is the actual audit result. And we're going to have that done this fiscal year. It's going to tell us, look, if we thought this was high, are we getting a high audit result? And if this said it was in the middle, is it a medium? We don't look at the low. Going forward, we're going to actually drill down because the system has roughly 90 algorithms. So the next piece of work that is going to take a little more time is drilling down to say which algorithm of the 90 is off and leading us a bit astray into the guts of the mechanism.
Well, you probably need a 14-year-old because they're good at algorithms. The other piece on training is clearly on page 9 at the top. And you've mentioned some issues. There was issues mentioned by the Auditor General which really were in tracking who had what training. And he clearly pointed out that it was kind of inaccurate. But one of the parts, and I know you've said you're now trying to track it better. Let me just ask the specific piece, and that is, part of the problem was computer system limitations. You solved that issue? Because clearly you can track on paper, but if you're using a computer and it still has limitations, you've got a bunch of paper, not in a system, and that means somebody has the paper and not necessarily the person who needs to look for it.
Yes, thank you. We have actually been putting more energy into that since the Auditor General's report has come out, and while there are systems limitations, the agency had also been relying on our regional operations who coordinate the training for us to, and who also are responsible for conducting the audits to do that monitoring. Now what we're trying to do is match the two from a regional and headquarters perspective, and we have started actually piloting using the system to see how the courses that we are meant to deliver are actually delivered to the aggressive tax planning auditors against their learning plan. So that in our view, is a very effective way of using the system, and we're hoping to be able to roll it out to more programs as after this pilot, which we're doing right now.
Very good. Thank you. Time has expired. Sure. All right. Next in rotation is Mr. Carmichael. Vice Chair, you have the floor, sir.
Thank you, Mr. Chair, and welcome to our guests today. Mr. Ferguson, if I could begin with you, sir. Question specifically, in your conclusion, you state, we concluded that overall the Canada Revenue Agency's aggressive tax planning, the ATP, program has tools to detect, correct, and deter non-compliance. Specifically in the report, you talk about the CRA's field auditors and Income Tax Rulings Directorate and how they're able to help when it comes to detecting aggressive tax planning schemes. Could you elaborate briefly on how both the CRA's field auditors and its Income Tax Rulings Directorate is equipped to deter aggressive tax evasion schemes? And could you also provide the committee with examples of how CRA's field auditors and its Income Tax Rulings Directorate have been effective in detecting these aggressive tax schemes?
Thank you, Mr. Chair. And I guess I would suggest that probably CRA can give you much more details about how these operations operate. But, you know, we did identify that CRA has a number of ways of detecting aggressive tax plans. You know, and referrals from auditors of the Income Tax Ruling Directorate was certainly one of those. The Directorate, I guess, we've identified as it's being a source of business intelligence, particularly, because they give advance income tax rulings, so that would help them get some insight into the type of tax plans that people are considering. So, again, we identified it as one way that seems to be effective for the CRA to gain the knowledge of the types of tax schemes that people are putting in place.
All righty, thank you. And then to the officials, again, I opened with the conclusion, which, again, just for your benefit, states that CRA's aggressive tax planning ATP program has the tools to detect, correct, and deter non-compliance. In the report, specifically in this report, the Auditor General reviewed the CRA's approach to 4 types of aggressive tax planning. I wonder if you'd be good enough to speak to those 4 types of tax planning, hopefully as briefly as possible, and that were looked at in the report. And are these aggressive tax planning schemes something the CRA is used to dealing with? You mentioned the high skill of the specialization of the individuals that are dealing with these issues, and perhaps you could address that. And can you also outline some of the successes that CRA is enjoying right now as a result of this this monitoring and work that's being done?
Mr. Chair, the CRA focus, and it's a shared interest, I believe, with most taxpayers, is early certainty. And so we see our income tax rulings and other functions as kind of an early warning area, an area where, in the gray, where there's an ambiguous position or a desire for certainty on the part of the taxpayer, there can be a dialogue. And we provide that almost from a service perspective. However, that's also business intelligence, and the agency has made using and mining business intelligence a huge priority. And so when we look at our rulings function, we don't just look at how quickly and how accurately we provide the rulings, but we also say, okay, well, this tells us what's on the mind of taxpayers. This tells us about the positions that may be of risk and that we should be informing ourselves and understanding the full implications. In terms of the 4 specific examples, I think that brings it up to a strategic level where one of the objectives of the agency is to modify people's behavior towards compliance. And so in each of the 4 cases, either through the legal system, through work in the Department of Finance, we found practices that we felt were non-compliant, and through a combination of interventions and tools, those practices are no longer occurring. So from that perspective, we see it as a strategic success. However, we also generate revenue. The revenue is in the name of the agency. And in this program, from 2006 to today, we've had roughly 8,600 audits, yielding $5.6 billion in additional revenue. And when you do the math on that, you're somewhere between $600,000 and $700,000 per file. And when Canadians see the CRA pursuing some lower income Canadians, there's often a lot of concern that CRA just picks on Canadians of modest income. But in this space, when you crunch the numbers and you look at the number of audits we're doing and the dollar value, you can see that we're well north of $500,000 per audit on average. And so I think both from a strategic perspective in terms of curbing behavior and also from a revenue generation perspective, we do have a track record of results, but as the OAG has pointed out, opportunities to improve.
Thank you. Time has expired. Sorry.
Thank you.
I know, it goes by fast. Over to Mr. Jaguar. You have the floor, sir.
Merci, Monsieur le Président.
Thank you, Mr. Chair. And I'd like to thank the witnesses for being here today. My first question deals with 3.18 about the difficulties of figuring out what the highest risk corporations are. And I turned to a tax specialist, Leopold Lozon, an external tax specialist, in my examination of this, who deals with the real tax rate. He published a document on this. He spent 3 years studying it, and he used 3 years' worth of information from the Government of Canada, 2011-2013. And here I have the real tax rate of the 95 most major corporations in Canada. And when I see TransCanada having $5,900,000,000 and only pay 1.7% real tax rate, it's fairly clear that in terms of tax planning, there is some abuse. And when you look at the macroeconomic level, what the trends are in terms of taxation, you realize that corporations generally are paying fewer and fewer taxes, and people who don't have access to a high-priced tax specialist are paying more and more. It is clear that there is an abuse here on the face of it. So I'd like to know if you can put an end to this trend, or are we going to always have to play catch-up with these corporations and correct these situations that occur? I'm going to start talking about 3.18, where you're talking about the information and the data that's available at the agency, because I think it deals with one important element of risk assessment and risk management. At the agency, we have over 90 arrangements with other governments and 20 arrangements with fewer details with other jurisdictions. Now, these arrangements on information exchange are critical because they give us more information about the sources of transactions. So if a Canadian corporation that has an international presence might be involved in transactions that involve other jurisdictions, and without having the necessary all of the ins and outs of the transactions, we already have the lack of information that the OAG pointed out in that paragraph. Over at the agency, we believe that this ever-growing number of arrangements will give us ever more information. Secondly, we have implemented a tip line that allows for informants to report leads as well as cash payments if the agency can recover some money. That tip line has been in place since January 1st of this year. We've already received many calls, and we have over 100 files, real serious files with some big numbers associated, and I think that's another tool that helps us out. The Minister of Finance was very active over the past 5 or 6 years. They adopted several legislative measures that help us out. And finally, I'd mention that starting in January 2015, we're going to have access to all the transactions over $10,000. We'll be able to get information about them. So the convergence points of all this is that we're going to have more information generally that will allow us to better target risks and identify them. The tools that we have at our disposals continue to increase in number. At 3.37, you punish externalities if you want, but you're not talking about the internal element. There is no pulling back of the corporate curtain. We don't know what the members of the board of directors have to deal with. If for example, they've authorized aggressive tax planning, we could target them, and I don't see that kind of measure. You are punishing somebody who's a tax specialist, but you're not punishing the board of directors or the members of the board of directors who gave their approval, and they're personally responsible for it. Well, I'll tell you, at the agency, we have targeted promoters of aggressive tax planning, those who convinced Canadians to enter into charity schemes where the number of participants were, and in that case was reduced by 95%. And in our prosecutions and our criminal prosecutions, we have focused heavily on the promoters. Right now, we are focusing on the promoters, those people who take advantage of these aggressive programs. We are focused on those.
Merci. Over now to Mr. Hayes. You have the floor, sir.
Chair, I want to focus a little bit on the tax evasion versus tax avoidance. And specifically, when we look at the areas that were studied that were aggressive tax planning, offshore insurance, RRSPs, stock dividend value shifts, tech recs. Initially, would they not be legal, i.e. classified as tax avoidance as opposed to tax evasion? and then based on the diligence of the Canada Revenue Agency and them going to Finance Canada to say, hey, look what we uncovered, Finance Canada then made legislative changes and budgetary changes that now make these items illegal, and therefore they are now classified as tax evasion or as opposed to tax avoidance. So I just want to understand that relationship from your perspective.
Mr. Chair, I'd first start by clarifying our definitions of tax evasion versus tax avoidance, and note that as mentioned in the, as you know, it's mentioned in the Auditor General's report, the Auditor General focused on tax avoidance, aggressive tax avoidance, not evasion. So for what we see as tax evasion, that's when somebody intentionally underreports revenue or over-claims expenses. There's a criminal, often a criminal intent to deceit. Avoidance, however, can taxpayers in Canada can legally avoid their taxes in a number of ways. It's provided for in the legislation, RRSPs as an example. However, when somebody interprets the legislation and goes beyond the intent of that legislation, that's what we call aggressive tax avoidance. And the four issues described in the report is what we at the agency found were examples of aggressive tax avoidance.
So that being said, when I look at the RRSP strips in particular, when I read the intent of what these RRSP strips were, I looked at that and said, like that's tax evasion, plain and simple. And in 2011, the federal budget stopped the use of these plans. So back to that, if the federal budget stopped the use of these plans, yet I'm getting the sense that people are still able to use them, what is the process for eliminating that altogether? Because it seems to me like it's blatant tax evasion if somebody's using the RRSP strips.
Just from finance, maybe I'll take that one. RRSP strips is a good example where it's sort of on the border of evasion and avoidance. Some of them were so aggressive, the sort of first generation structures, CRA had some arguments under existing rules that in fact that the tax plan was not effective, like just not legal, and that would tip you over to a kind of an evasion category. Nevertheless, the planning was quite widespread and promoted. It got more sophisticated, and the more sophisticated versions of the plan were exploited weaknesses in some of the rules, and then you were into avoidance. Budget 2011 introduced new anti-RRSP strip rules, which were clearer and more specific, and carried more serious sanctions. So I'd say that now the issue has been addressed, whether it was a case of evasion or avoidance before. It's now quite clear under the law that the plans are not effective.
And that would that be the same with the stock dividend value shift? And kudos to CRA for uncovering this. That's really, I mean, I'm a CPA. This is you got good staff obviously to uncover some of this stuff. So the stock dividend value shift, the courts ruled to deny the tax benefits. So now that the courts have ruled, if anybody is using that methodology again of tax avoidance, because the courts have ruled, is that now tax evasion if somebody does that again?
Thank you for this follow-up, because it was a comment I was hoping to jump in on earlier. I don't think the fact that that a transaction is not actually found by the CRA or by the courts to sort of work, if you will, technically, makes it tax evasion. I mean, there may be circumstances where a taxpayer takes a position that the tax payable is such and so because of the transaction they've undertaken and their interpretation of the law. They may file a full report of that in their return of income. And the fact that CRA disagrees, challenges it, and wins does not make that tax evasion on the part of the taxpayer. There can be other circumstances where the taxpayer seeks to not only take the position but hide that position, which can move it over to tax evasion. But just losing to CRA does not make it tax evasion per se.
Thank you. Thank you. Time's expired.
Thanks, Mr. Chair.
Thank you. Moving over now to Madame Jones. You have the floor, ma'am.
Thank you, Mr. Chair, and thank you all for your presence today. I have a couple of questions with regard to 3.62, and I know you noted here that it was a subsequent event. The federal budget tabled on February 11, 2014, proposed changes to address the offshore insurance plans. I guess my question is, has there been any advance made with regard to that, and what's the plan to, I guess, kind of roll out that particular initiative in the next year?
If I may? Thank you, Chair. The answer is yes, it's been advanced. In fact, it was enacted into law last fall as a part of the budget measure. Oh, sorry.
C-43.
I'm sorry, I'm mixing up my years. 2014, it's in C-43 this year, and has passed the House of Commons and is now in the Senate.
Okay, so this year it will be applied to 2014 taxation year or 2015?
I'll ask Alex, my colleague, to confirm, but I believe it's taxation years commencing after the date of the budget.
I think that's right.
Oh, okay.
Answer,
no.
or you want to move on?
No, I'm going to move on.
Very well.
My other issue, I guess, is around in the conclusion. You talked about the need to complete the evaluation, the effectiveness of the agency's national risk assessment model. I know we've already had some discussion on it today in terms of measures that you've taken to improve that and the training that you've done with your staff. I'm just wondering if you could outline for us what some of those key measures have been and how you see that it's going to be a major improvement on a go-forward basis in the system.
So in terms of training, the step that we didn't have was going back and actually documenting that people were taking the training. The training was being offered, as it should have been. Secondly, that employees were taking it. And thirdly, based on their actual day-to-day work, whether they absorbed the lessons they needed to absorb. And so we've decided those are the three key questions. We've developed tools to get at those questions. And moving forward next fiscal year, we're going to be documenting the answer to all those questions. And based on the answer, we'll be changing our game plan. In terms of the NRAM and the risk assessment approach, the first step was to just calibrate whether the correlation in our minds between high, very high, extremely high risk and the audit results tended to correlate or not. And that's going to happen by March 31st this year. Then moving forward, we're going to do a more detailed analysis, kind of factor by factor, to say, okay, this exact sub-factor in trying to assess the risk around a corporation is predictive, this factor isn't. And as I mentioned, we have roughly 90 factors or algorithms that we use. So I think this is part of the evolution of the tool. We started with a structured, formal questionnaire that people had to answer so that we were systemic across all of our offices. We've now moved to automate that thing. We're now moving to decide whether it works in terms of a direction. And then the final stage for us is, what are the specific levers and do they work so we can optimize it?
Okay, good.
A minute and a half.
No, I'm good.
You're fine?
Yeah.
Very well, thank you. Moving along then to Mr. Falk. You have the floor, sir.
Thank you, Mr. Chairman. Thank you, witnesses, for coming here this morning, or this afternoon. It still feels like morning, but I have a few questions, Mr. Gallivan, for yourself. In your opening comments, you state here that some transactions comply with the letter of the law, but violate the spirit and intent of the law. And I'm just wondering whether you could expand a little bit on that tension.
There are some taxpayers who have a financial interest, a legitimate one, in minimizing their tax bill. And so they look within the legislation and they have expert advisors to help them, and they adopt a position. And that position can be tested with the agency through a rulings process, or they could merely file the return based on that. But they're pushing the envelope, and some people describe it as a gray space. The agency will look at some of these transactions, and the agency position might be that it's offside. And so then there's communication back and forth. There's reference to the legislation. This may go through a legislative route. This may go through litigation through the court system. In some cases, and this is back to the question of tax evasion, some of these taxpayers will actually sign a waiver extending the time that CRA has to finalize its audit. And so it's very transparent in that sense. And so the challenge is deciding where that line is and having an authoritative source establish where the line is. And that's why it can take several years. That's why sometimes Department of Finance will intervene in terms of making the rules of the game clear. And back to the comments about tax evasion, often these positions are fully disclosed in a very transparent manner.
Some taxpayers want to minimize their tax. I would submit to you all taxpayers want to minimize their tax, even though I myself want to pay more tax, if that makes sense to you. Yeah, okay. Thank you. Clear. Just so we're clear on that, yeah. Just previous to that comment or that paragraph in your presentation, you also you refer specifically to the government encourages legitimate tax savings as tax avoidance. What's CRA's role in educating people on legitimate tax savings?
It starts from the rules and working with the Department of Finance even at the outset. Department of Finance will often consult the CRA in terms of the rules, and we try to provide early input in terms of ensuring that there's clarity. The agency has put a lot of effort into its electronic service and web services to help taxpayers take advantage of the credits that are available to them. We've gotten into webinars and almost a tax tube type approach where there are videos. We've developed a community income tax volunteer program to reach out to some of the more vulnerable Canadians and make sure they're aware of the benefits they're entitled to. So there's very much a promotion and marketing type approach. We also look again at the data and see if Canadians are taking advantage of the credits available to them to make sure that they're aware of it. And if we need to reinforce communication messages, we would. And so at the agency, we have a specific directorate focused on the benefit programs, for example, and they would work very hard. When the tax-free savings account was launched, in terms of TFSAs, RRSPs, and other programs, the agency kind of cross-promotes within its website and other guides and forums to make sure Canadians are available, that they can take advantage of these programs.
Okay, good, thank you. In his report, the Auditor General noted that the CRA has successfully employed the general anti-avoidance rule from both a deterrence perspective as well as a learning perspective. Could you explain a little bit more how CRA utilizes GAR or GAR, however you refer to it, and in what types of circumstances?
Yes, Mr. Chair, the GAR, or the General Anti-Avoidance Rule, is a provision that we use when we think that the spirit or the intent of the legislation has been taken too far. So basically, it's a role that we take very seriously. We have what we call a GAR committee with representatives from the Department of Finance, the Department of Justice, and the CRA. And when an auditor identifies a potential scheme where the GAR would apply, it's referred to this committee, and it goes through a thorough vetting process to ensure that the rules are applied very consistently and methodically. So it's once a GAR is applied, basically the tax benefits that the taxpayer was trying to achieve by entering into this particular tax planning arrangement are denied. So it's not a penalty, but basically the taxpayer is not able to enter into that tax transaction and get benefits.
Thank you. Time has expired. Okay. Moving along over to Mr. Zaguer. You have the floor again, sir.
Merci, Monsieur le Président. Thank you, Mr. Chair. I just want to finalize this issue of penalizing third parties. We are currently punishing those who promote the system, but I'd also like to punish those who authorize aggressive tax planning. In the United States and certain European countries as well, the members of the board have to commit in writing solemnly not to undertake those kinds of actions following the Enron scandal. And the board of directors, or the members of the member of the board of directors who authorizes that kind of planning, is severely punished and can even face prison time. Why is Canada not taking that particular tack that we are seeing more and more frequently in other countries? The CRA currently, with its international large corporation program, is looking at board of directors right now. Our risk assessment program has an important element to submit feedback to the board of directors of large corporations. When we determine what the level of risk of any given corporation is, especially in the case of high-risk corporations, we call a formal meeting with the board or the representatives of the board to convey that message to the corporation. I think we agree that there is a certain responsibility to be taken by the members of the board of directors, and currently our tool essentially consists of feedback. There are certain corporations who support us because those very corporations divulge the feedback that they get from the CRA. Yes, I'm fine. I like when people pay their taxes. My problem is with those people who don't pay their taxes. And the study that I have before me is incredible. Just in the financial sector of between 2009 and 2011, the 11 main financial institutions of Canada essentially didn't pay $9 billion worth in taxes. $9 billion in taxes, you give me that, any problems that we currently have, social housing, the waiting lists in hospitals, we can solve those problems with $9 billion. And that's the problem I have. Certain people change when you try to talk to them, but those that don't change, I want to know if you're going to use something else in your legislative projects, any punishment for them.
It's some detail I'd like to add that I wouldn't thrive very well in French, I'm afraid. First of all, to the point that there's large corporations that are evading taxes, I think that's, let me say, unlikely to be the case. I think large corporations pay particular attention and retain some very expensive advice to try to make sure that they're operating within the terms of the law. Now, sometimes they are able to come up with plans that push the law to the limit. I think that's right. They do that on the basis of pretty good legal advice, and sometimes they're wrong, but I don't think that makes it evasion. Point one. Point two is that I think that the examination of just sort of a percentage of tax paid fails to capture, in many cases, the reasons why there's lower taxes. There could be loss carry-forwards, foreign income that's not subject to tax, intercorporate dividends. Sometimes there's incentives in our own system that corporations as well as taxpayers can avail themselves of. And so I think it's important to be mindful of that as well. The other point I will make on large corporations, and particularly on cross-border or international income, is that the OECD and we, as part of the OECD, are concerned about some of the transactions and structures that are being undertaken to minimize tax. And the so-called BEPS exercise, that is en anglais, the base erosion and profit shifting, undertaken by multinational corporations, is something that the OECD has been working on. It's been the subject of G20 commentary and support, and indeed there's G20 countries that are participating with the OECD to try to develop proposals to constrain base erosion and profit shifting, this sort of tax minimization that happens internationally. The final point I would make is about the third-party penalty rule that the honourable member has identified. I think you should be happy with this rule. We have criminal rules, that is, criminal sanctions for those who evade taxes. We also have criminal rules for those who aid and abet in the evasion of taxes. We had, up till 15 years ago, a civil penalty that applied only to the taxpayer for misrepresentation or other tax non-reporting that didn't or was judged not to meet the threshold of tax evasion, but we did not have a civil penalty that applied to the person helping that person avoid their taxes. And these third-party penalty rules that are discussed in the Auditor General's report, and in respect of which there's a Canada Revenue Agency committee to judge its application, are the answer to that. Now, I will note that these are actually under challenge right now in the court, but I think that in terms of the honourable member's question, he, just based on his stated view, he should be supportive of this because it does help ensure that taxes are paid and that people don't facilitate others avoiding taxes.
Merci beaucoup. Time has expired. Over now, back to Vice Chair Carmichael. You have the floor, sir.
Well, thank you, Mr. Chair, and thank you for that comment, Mr. Irwine. I want to just add on to it because I think this is a very good discussion. My colleague spoke to boards of directors and dated back to the Enron scandal and some of the difficulties that were held by corporations in the U.S. early on, and we saw a lot of press around that. But out of that, I think, has come great education. Organizations like the Institute of Corporate Directors, originally out of U of T and spread across the country now, that are educating those who want to participate on a board of directors as to what their obligations are. And so if you're going to participate in a board today, you better know what the rules are and what your obligations are so that that company is operating at a standard that's not going to put you or any of the other your other colleagues into an area that's going to have you under review. I also think that that type of education has taken us away from a day of, quote, the rubber stamp environment, which was, I think, you know, when we saw what came of those early scandals in the newspaper and in the media, I think it was disheartening to everybody out there, and certainly to those that might be in the investment world, to see the type of mismanagement that was going on within those organizations. And I think today we're in a better place because of some of that. And you talked to some of the learning at CRA and in some of the organization. I think that's a positive solution. Mr. Gallivan, in your report, or in your opening comments, you talked about TIBA and some of the benefits of TIBA. I wonder if you could just expand on that and talk to us a little bit about how and what it does. How do you measure and how does it work? And does CRA use TIBA to leverage and improve upon audit activities that it conducts?
Sure. You know, in terms of what the CRA is trying to assess is the direct tax assessment, the actual audit result in the here and now. So the entry that we would post the taxpayer account. Certainly with businesses, it's a little more complex than that, though. They have loss carry forwards and other pools that are multi-year in nature. And so, you know, the tax earned by audit tries to abstract the kind of predicted value of that to kind of give us a sense of what the economic impact of that audit was. And so we use that number to tell us whether our audits are being efficient. And so it's a fairly good efficiency indicator. But we also try to complement it with effectiveness indicators. And so we talk about practices that have disappeared. Earlier in my remarks, I talked about gifting tax shelter. Gifting tax shelters were a phenomenon in Canada with a large number of participants, a lot of parties and stakeholders put a lot of effort, and basically the practice is wound down. We now have 95% fewer participants. We went from roughly 50,000 to 2,500 participants in those gifting tax shelters. And so that reduction in the participation to us would be more of an effectiveness indicator. And so our TIBA results have been trending upwards, up to into the $10 billion range per year. And as an organization, that tells us that we're being more efficient. But we're also working hard to develop other indicators, because at some point we'd like TIBA to go down, because that would tell us that we're being strategically successful. So we've recently implemented something called the Liaison Officer Initiative, where we've taken 120 auditors and we said, look, we don't want you to do audits anymore. We want you to go out to businesses and talk to them about common mistakes and errors. Schedule appointments with taxpayers and help them get it right from the start. Now, we've done some control groups, and we're going to do statistical sampling, and we're going to follow the people we visited in the control groups, and we're going to make sure that there was a tax lift from those visits, and we'll assess that, and we'll do the math. But it's that kind of measurement that we're trying to do at a strategic level. So we're very happy at an efficiency and at a tactical level when TIBA goes up. In aggressive tax planning, for example, we went from $1.2 billion in fiscal 12-13 to $1.7 billion in fiscal 13-14. So it went up $500 million. And that's an operational success. But strategically, 5 or 6 years from now, I'd like to be before this committee telling you that it's actually gone down because we've stamped out the practices.
Excellent. Time?
Just a couple seconds.
Couple of seconds.
There we
Thank
go.
you.
You're welcome.
Thank you.
That's the time. All right, moving along. Mr. Hayes, back to you, sir. You have the floor.
Thank you very much. I really appreciate that, Mr. Auditor General, or Mr. Chair. I didn't think it was my turn.
You're welcome, Mr.
So
Hayes.
we'll just jump all over that. I want to talk about Mr. Auditor General, Mr. Ferguson, Section 3.32. You mentioned that you looked at how the agency informed its ATP staff about the 4 selected aggressive tax plans described in the chapter. Could you comment on how the agency informs the staff and what your findings were?
Thank you. In that paragraph, we do talk about 3.32. We talk about how they inform their staff, and that we found that they had communicated to the ATP auditors through technical news bulletins, information sessions, or webinars to make them aware of the nature of the plans and how that they could be identified. So, we said that we found that the agency adequately communicated information related to the 4 selected aggressive tax plans to their auditors. So they were using a variety of different ways to make sure that their auditors are aware of the types of tax plans that are happening.
That's a good segue into my next question, because this is for you, Mr. Gallivan, and it's specific to, I want you to talk about some of the ongoing emerging issues surrounding tax avoidance. I mean, this report studied 4 issues. I expect you guys probably have sunk your teeth into another issue at this stage of the game. And I want to understand really what the department is doing to identify new emerging issues, and what is the process to sort of develop an aggressive tax plan surrounding a new issue. And with regard to Mr. Ferguson, he was pleased with the way you would communicate that. So as step 3 of the question, I would want you to tell me or tell this committee, how would you go about communicating that said plan to your staff?
I'll answer that question, Mr. Chair. In terms of the first part of the question, what work we're working on, how we're finding new schemes, we have what we call centers of expertise for aggressive tax planning. This is where we have auditors that are very well trained and experienced in identifying potential schemes. We have aggressive tax planning auditors across the country and various tax services offices as well. So they are an excellent referral to our Center of Expertise. So the Center of Expertise does data mining of our tax returns and forms that are available to us, whether it's information forms with relating to assets or income from international, from other countries, or from even domestic measures. This group will analyze various forms of business intelligence. They'll get referrals from our tax rulings department, and then once they potentially identify a scheme, we may go about creating a pilot where we will select a certain part of our taxpayer base and conduct some test audits to see whether those schemes are indeed considered aggressive tax planning. And if there is aggressive tax planning detected, at that point it may go to the GAR committee. We will at that point often advise the Department of Finance of our findings to identify a potential tax loophole. And sometimes the case is litigated through the courts, etc. So that's the process we use to identify. In terms of communicating, as soon as we do identify, like I say, we do pilots, but in other cases where we have more certainty, we have what's called a wiki, which is an electronic means of communicating with our auditors in real time. Our auditors have access to real-time updates on what we're finding in terms of potential schemes. We receive information from our treaty partners, and we are part of what we call JITSIC, a Joint International Tax Information Center, where we also exchange specific tax avoidance information. That, as soon as information is identified, is communicated. We have regular roundtables with our tax auditors across the country as well.
Thank you. Time's expired. Right on the button.
you.
Right on the button. Back over to Monsieur Giguère. You have the floor, Monsieur.
Thank you very much, Mr. Chair. It was brought to my attention that there is a particular practice that Bombardier uses thanks to a accounting firm called Ernst & Young, where they transform $150 million of profits into a complex transaction that turns it into a special dividend.
Of relevance, we're here to discuss the Auditor General's review of the aggressive tax planning regime that is operated by CRA. I think by bringing in other companies that are beyond the scope of this particular report, I don't think that this is the proper venue for these kinds of discussions, Mr. Chair.
No, I hear you, and I take it under advisement. I'd ask Mr. Giguère to keep that in mind. I'll give him the benefit of the doubt. And yeah, hang on, I'm not done. And then you, okay? That's how we do this, especially since I'm ruling in your favor. I'm going to listen to what Mr. Albus has said and keep it in mind. I ask you to also, but I'm going to hear the conclusion of your question to see how close it is to the actual matters before us. Having said that, you now have the floor again.
So it has to do with the tax practices, the transferring of profits through a special dividend. It is exactly what we are talking about. And my problem with that transaction is that the defense presented by the Luxembourg representatives and the representatives of Bombardier is that these tax tactics are approved by the federal government. And that's where the problem arises. On one hand, we are shown a chart that says we formally are against this particular form of ATP, and then on the other hand, we have a blatant example of that very practice. And the defense is that the corporations think of it as a competitive international practice supported by the federal government. So can someone explain to me how we can prohibit something on one hand and then hear these other corporations talk about a international competitive tactic? Mr. Chair, it would be completely inappropriate for me to talk about a particular taxpayer. I can tell the committee that the agency uses any information that is given it in order to fulfill its mandate, whether it be through our arrangements with other countries and other jurisdictions or information that is readily publicly available.
No comment on individual cases, and had that continued down that vein, I would have ruled it out of order. But as it pertains to policy, then I think that's fair game. And so I'll go back to Monsieur Giguère, but if he does talk about the policy, then I would direct that you need to respond to a question of policy. But I do support your sense that we're not going to talk about individuals here at all. So with that, Monsieur, you have the floor again.
And I can even say that the American government had to face that kind of problem presented by two firms, UBS and Credit Suisse, who used the very same system. And the American policy was to severely punish these two banks to the point where they were threatened with being prevented from accessing the American landmass. So I want to know what tack you're taking here to see this particular abusive tactic avoided internationally?
The first is, again, trying to stay clear of any discussion of any particular taxpayer circumstances. I think there's a world of difference between the type of situation, abstractly, that the honourable member raised in his initial question and the UBS sort of example that he identified near the end. One, as far as we were given to understand, was the matter of clear evasion and was treated as such. The other was a situation, or it seems to contemplate, an examination of Canadian tax rules in respect of dividends being paid back to Canada from foreign companies operating in countries with which Canada has a tax treaty. Parliament enacted rules to exempt dividends from active business income from Canadian tax when paid from a foreign subsidiary of a Canadian multinational. And if the question is whether that was the right decision or not, it's I guess, a question to return to Parliament to. But it's a very separate question from the challenge of taxpayers who seek to avoid or evade taxes, such as what we understand the UBS type case to be.
Okay, fair game. Mr. Zaguerre, you still have 20 seconds. Real quick.
Une organisation de coopération.
The Organization of International Development said that one of the problems with aggressive tax planning is essentially the general portrait laid out by tax planners every day. And the organization was saying that one of the problems was that these country-to-country tax arrangements that prevent double taxation, certain countries, we can't deal with them. I'm thinking here of Iran, I'm thinking here of Cuba. Why do we create financial agreements with these tax havens?
Very briefly, I'll make 2 points again. It seems we're always having 2 points. One is that there is a concern with the terms of the tax burden borne with international transactions, and the OECD, of which Canada is a part, is trying to see if something can be done to minimize tax minimization through cross-border transactions. Actually, I'll leave it at that. Thank you.
Fair enough. Thank you. And moving along to our last speaking spot, Mr. Fulk. You have the floor, sir.
Thank you, Mr. Chairman. I think you guys work in an exciting environment, and you must actually admire some of the creativity and ingenuity you see from people trying to avoid tax. In the tech industry, they hire the hackers to teach them. One of the recommendations in the report from the Auditor General is that there's a gap between the learning path and also the education of some of your tax auditors. Do you ever retain the services of the people that are so creative in devising some of these schemes to educate you?
There are at least 2 ways in which the CRA gets that kind of insight. The first I mentioned, our offshore tax informant program line. The people that are contacting us through that line are insiders. There are people who had direct access to offshore transactions and non-compliance and kind of had a front row seat. And when we approach that, we don't just try to deal with that one taxpayer on a transactional basis, but we try to mine that scenario. The second source is our voluntary disclosure program. So when taxpayers come forward for whatever reason, make a voluntary disclosure to correct their tax affairs, again, we don't handle that transactionally. We also try to mine that as a scenario and push that back through the rest of the taxpayer database. I won't make any comments about hiring people, mid-career professionals from other organizations, and I won't talk about our attendance at various seminars and other events where these matters are discussed because I don't want to give offense to anybody. But we do have an active business intelligence function as well while we're out in the community of practitioners.
I guess the important thing from the audit perspective is that you document it. Our government in the last couple of budgets has tried to address some of the loopholes with aggressive tax avoidance practices and schemes that people have developed. Can you talk a little bit about some of the measures in the last few budgets that have given you the tools you need to do to collect the taxes that are due?
I don't want to belabor the Offshore Compliance Directorate, which is a distinct directorate from Lisa's, but that organization has 70 people in it. And the $30 million over 5 years that we've invested has really, I believe, given us really effective measures. The government also made changes to the T1135, and that has increased the burden on taxpayers and practitioners. But we believe that the T1135 is the reporting of foreign held assets. And we believe that kind of extra insight both helps us target which taxpayers we need to look at, but also tells us which taxpayers we don't need to disturb with an audit. So those are a couple I would mention specifically.
Okay, I'm good, sir. Okay, unless I can share my time.
Yes, you may. Mr. Carmichael, by all means.
Thank you, Mr. Chair. Just to follow up on Mr. Gallivan, you mentioned the voluntary disclosure program, and there were media reports that suggest that since 2006 we've seen good growth in that as an area of taxpayers coming forward with disclosure of errors or whatever. And I wonder if you could just comment on that program and some of the benefits that we're seeing from the voluntary disclosure program today.
The overall disclosures are up 80%, so a fairly significant increase, and that's both in terms of the number and the dollar. So they're not small dollar cases. But we also break out the international transaction, the international element, and that's up 400%. And again, both in terms of numbers and volumes. And so just on the international front, in the last 7 years, it's roughly $2 billion in additional income that's been reported just through that program. And then as I alluded to earlier, we take those scenarios and then we push that through the data that we have to identify other taxpayers involved. I guess the other benefit is these taxpayers are normalizing their tax affairs. They're minimizing the amount of penalties and interest that they have to pay. And we can only expect future compliance from those taxpayers. So it's not just the dollar value as well. I think those are businesses that are probably correcting their affairs, and that's probably healthy from them from an economic perspective as well.
Is there time?
Sure, half a minute, half a minute, not half a second. Sorry.
It's life in the
wishful thinking, maybe.
So just to your point, then, with the voluntary disclosure program, we've talked about the tax avoidance, tax evasion. We've talked the aggressive side of this world, and on the voluntary disclosure program, you've got regular taxpayers, for lack of a better term, coming forward, paying their taxes, paying their past interest, doing what they have to do to ensure that they're on a level playing field with CRA and doing what's right. Is that correct?
It is, and in fact, we've seized the opportunity to promote it. And so whenever we have a chance to communicate that message, we are trying to get the message out. And we're also pointing to the January introduction of FinTrack data and kind of putting that message together to encourage people to come forward with VDP, because eligibility for the program ceases once we do begin an audit.
Great. Okay. Thank you. I have one quick question I just want to ask. It's not a controversial one. I'm just curious. I assume, and I assume this is the case, I'd just like to know if it's not. I assume that even files like the Auditor General, who personally has to file income tax like everybody else, the Prime Minister, the Governor General, are they handled in exactly the same way as anyone else, or because of reasons it's how they're dealt by in a different path, go to different people? Could you answer that for me?
I can confirm they're handled in exactly the same manner.
That's what I wanted to hear. I was hoping to hear that. Very good. Okay, and with that, I will thank you on behalf of the committee for being here. Appreciate it. Very good discussions, very good answers, very clear. Thank very much the government side and Auditor General, as always. We appreciate everything that you do. And may I also, to all of you that are here and our staff and everybody else, wish all of you a Merry Christmas, a Happy Hanukkah, Happy Holiday, whatever warms your spirit. And wish all of you a very, very safe time, and we look forward to seeing you back here again, having more fun in the new year. And to my colleagues, same message. And best thing you could hear from me right now is, we stand adjourned.